Good morning. Today's topic is what is the maximum solo 401k contribution for a Mega Backdoor Roth? Are you self-employed or a small business owner looking to supercharge your retirement savings? You've probably heard about the Mega Backdoor Roth strategy. But here's the big question. What's the maximum contribution you can actually make using your solo 401k? Please stick around because in this session, we are going to break it down step by step. And by the end, you'll see how this strategy could help you put away far more than the traditional limits allow. As always, please subscribe to our channel for more notifications as to when we go live. Go ahead and also type over your questions during the live chat, and we'll go ahead and answer those as they come in. Let's see here. Looks like we have a question here. Can you have an after-tax account at a bank and a brokerage firm through my solo 401k financial? Good question. So yes, that's one of the advantages of using my solo 401k financial as the solo 401k plan provider versus our competitors. Our competitors typically make you use their respective bank or brokerage firm to hold the funds. Here at my solo 401k financial, we don't believe in that model. We believe in you as the business owner deciding where to hold your darn solo 401k funds at. At the end of the day, it's your money, so you should decide where to hold the money at. As a result, you can choose to hold the funds at your local bank, whether it's a credit union or a major bank or a regional bank or a local bank. And you can also use a brokerage firm like Fidelity or Schwab, for example. And yes, many of our clients will open up a brokerage account and a bank account for the solo 401k. In other words, you can have multiple holding accounts for the same solo 401k plan at different financial institutions. So hopefully that answers your question that yes, it's considered just one solo 401k plan, and you can utilize your local brokerage firm or any major brokerage firm to hold the funds. And then you can also use a bank to also hold the solo 401k funds. It'll still be considered one plan. However, you would have separate holding accounts at separate financial institutions. Okay, please continue to type over your question during today's daily webinar, which again, today's topic is what is the maximum solo 401k contribution for a Mega Backdoor Roth? Please also like our video, subscribe to our YouTube channel so that you receive notifications when we go live. Okay, let's continue with today's topic. In the meantime, you can shoot over questions about solo 401ks, self-directed IRAs, traditional 401ks, rollover business startup 401ks. We're well versed in all of those regulations. So most people think of the solo 401k as capped by the standard IRA contribution limits. That is employee deferrals and employer profit sharing contributions. Those are the type of contributions that you can typically make to most solo 401k plans. But what if I told you there's a third bucket of contributions? Voluntary after-tax contributions that could unlock tens of thousands of dollars more. This is exactly where the Mega Backdoor Roth comes into play. It allows you to take those after-tax contributions, convert them to the Roth Solo 401k or the Roth IRA, and build up tax-free retirement wealth. So what we're going to do here in today's webinar, we're going to cover certain topics. So we're going to talk about the 2025 Solo 401k contribution limits. And how they are calculated. So the year 2025 Solo 401k contribution limits are based on the yearly IRS cost of living index. So for tax year 2025, the maximum contribution to a solo 401k plan is $70,000 for those who are under age 50. If you are age 50 or older, then you can contribute an additional catch-up amount of $7,500. So that's for someone who is age 50 or older. Now, new for tax year 2025, if you are within a certain age group, you can make a super catch-up contribution instead of the normal $7,500 catch-up contribution. That super catch-up contribution amount is $11,250. And the super catch-up contribution became effective starting in tax year 2025. So this year. And it's only available to those who fall under a certain age group. That's going to be age 60, 61, 62, or 63. So if you fall within that age group, you can contribute $11,250 catch-up contribution instead of the $7,500 contribution. So you can't contribute both. Now, if you are age 64 or older, then you do not qualify for the super catch-up. Instead, just like those who are age 50 or older, you could make a catch-up contribution of $7,500. So that's the differences between the super catch-up and the catch-up contribution. Comes down to your age. Let's go back to the prior slide here. So we talked about the contribution limits for tax year 2025. Now for tax year 2024, the contribution limits are $69,000 for those who are under age 50. And what's great about the Mega Backdoor Roth Solo 401k strategy is that you can choose to make your overall contribution in total to just the voluntary after-tax Solo 401k bucket, and then convert it to the Roth Solo 401k or the Roth IRA, and therefore forego making employer and employee contributions. So for example, if for tax year 2024, you reported at least $69,000 of W-2 wages from your self-employed S corporation or LLC tax as an S corporation, you can contribute that entire $69,000 for tax year 2024 this year in 2025 by your business tax return due date plus timely filed extension. So you still have time to open a solo 401k plan here in 2025 so that you can make the voluntary after-tax solo 401k contributions of $69,000 for tax year 2024. So if you're self-employed business with an S corporation and you filed an extension, you have until September 15 of 2025 to both open that solo 401k and make that $69,000 voluntary after-tax solo 401k contribution for tax year 2024, provided that you had enough W-2 wages from your self-employed business to support that contribution. Because in order to contribute to a solo 401k plan, regardless of the contribution type, you have to have the necessary earned self-employment income to justify the contribution amount. And with an S corp, if you're self-employed under an S corp, then your self-employment income is reported on a W-2. And that's how the calculation is performed, is by looking at box 1 of the gross wages of that W-2. And again, if you reported at least $69,000 of W-2 wages for tax year 2024 from your self-employed S corporation, then you can contribute $69,000 for the voluntary after-tax solo 401k contribution here in 2025, and turn around and convert it to the Roth solo 401k or the Roth IRA as part of the Mega Backdoor Roth strategy. Now, for tax year 2025, the overall contribution limit is $70,000. Therefore, using my example again, if your self-employed business is an LLC, taxed as an S corporation, and you're opening the solo 401k for the first time here in tax year 2025, then you're going to be able to utilize the Mega Backdoor Roth strategy, provided that the solo 401k provider that you utilize offers such a solo 401k plan that allows for it. Not all solo 401k providers allow for it, and not all solo 401k providers will complete the job. In other words, they may allow for it, but guess what? They tell you to go ahead and report that conversion of that voluntary after-tax solo 401k on your own, or have your CPA do it. Well, you might be left scratching your head asking, well, typically when I do something, I make sure I do it correctly and I do it in full. So why would I use a solo 401k provider who's all they're going to do is just provide a plan that allows for the voluntary after-tax solo 401k contribution as part of the Mega Backdoor Roth, but they're not going to finish the job, because as part of the voluntary after-tax solo 401k contribution that then gets converted to the Roth solo 401k or the Roth IRA, that has to be reported in a couple of ways to the IRS. Number one, it's got to be reported to the IRS directly. And then number two, you also have to report that on your taxes. So it's not a matter of just printing off some Form 1099-R online and filling it out and sending it to the IRS. The IRS will not accept that. They require that 1099-R to be filed electronically, typically with the government. If you do file it on a paper form, you have to order a certain form from the government. It's usually a carbon copy that you would fill out and then mail it back to the IRS. But again, here at my solo 401k financial, we do the whole job. We don't believe in doing things halfway. So not only do we provide a solo 401k plan that allows for the Mega Backdoor Roth solo 401k strategy, but we'll actually perform the darn reporting with the government so that you get credit for it. So that's important to note when you're out there shopping around for solo 401k providers as part of the Mega Backdoor. Now, we just touched on the maximum contributions for the Mega Backdoor Roth. We gave an example of an S corporation or an LLC taxed as an S corporation as your self-employed business. So again, let's say for tax year 2025, your self-employed business is taxed as an S corporation. You pay and you want to know how much you should pay yourself in order to maximize your Mega Backdoor Roth strategy for tax year 2025? Well, the answer is pretty easy if you know what the heck you're doing. The answer is you need to report at minimum $70,000 of W-2 wages for tax year 2025 on that W-2. You don't need to report any more or any less. Why? Because voluntary after-tax solo 401k contributions are calculated on a dollar-for-dollar basis when we are talking about an S corporation, self-employed business. So therefore, if you pay yourself at least $70,000 of W-2 wages, you're going to be able to contribute that entire $70,000 as a voluntary after-tax solo 401k contribution for tax year 2025. And then you're going to be able to turn around and convert that to the Roth solo 401k. So this slide here is a good slide to kind of illustrate. So let's say you make $70,000 of W-2 wages. That $70,000 would get contributed to the voluntary after-tax solo 401k holding account, aka a bank account or brokerage account. You then immediately convert that voluntary after-tax solo 401k contribution to the Roth solo 401k so that there are minimal gains. Because when those gains are converted to the Roth solo 401k or the Roth IRA, you're going to pay taxes on those gains. Of course, the basis, the contribution will not be taxable because when they get deposited to the voluntary after-tax solo 401k bucket, just as the name after tax implies, you will not get a tax deduction for that contribution for the year. But the trade-off is that now you're going to be able to indirectly get more funds in your Roth solo 401k by utilizing the Mega Backdoor Roth strategy. So this slide is an example of a one participant plan. Let's say your LLC is taxed as an S corporation and you want to set up a plan. So the LLC would be the sponsor of that solo 401k plan. This is a one participant. This means that you are the only one working in the business. So therefore, you are required to have separate holding accounts under that solo 401k plan because a solo 401k plan is a defined contribution plan, which requires separate tracking of each source of funds. That's pre-tax Roth and voluntary after-tax. So this would translate to 3 separate brokerage accounts or 3 separate bank accounts, one plan, separate holding accounts. Let's talk about a 2 participant plan. We open up a lot of those as well. So let's say both spouses are self-employed in the same LLC self-employed business. So the business would sponsor the solo 401k plan, so just one solo 401k plan, because each participant's funds under the plan, as well as fund sources, are required to be separately tracked under the plan per the IRS regulations. Here you see a total of 6 separate holding accounts, aka bank or brokerage accounts. That's a pre-tax, a Roth, and a voluntary after-tax for each participant. So a total of 6. So just one plan, 6 separate holding accounts. Now, from a reporting perspective, let's say that we've got a 2 participant plan, so both spouses. Each spouse can utilize the Mega Backdoor Roth strategy. So sticking with our S corporation self-employed business example, let's say Jane and Tom are married and they're both working under the same LLC tax as an S corporation. Jane and Tom are both going to be able to make voluntary after-tax solo 401k contributions, which is going to be based on their respective W-2 from the W-2 wages from that self-employed business. So if they each report $70,000 on a separate W-2, they can each contribute $70,000 to the solo 401k plan and then turn around and convert it to the Roth solo 401k, resulting in a total of $140,000 for the year in Roth solo 401k funds. So talk about really supercharging your Roth solo 401k savings. And if you do that for a few years, you can really supercharge your Roth solo 401k funds. Now, we've been talking about converting those voluntary after-tax solo 401k contributions to the Roth solo 401k. You can choose to convert them to the Roth IRA instead of the Roth solo 401k. Most clients convert them to the Roth solo 401k because they want to consolidate all their retirement funds under one plan. They also want to be able to take a loan from their 401k, which is not allowed under a Roth IRA. They also want to invest in real estate, utilizing debt financing, where the solo 401k obtains a non-recourse loan. That does not trigger unrelated debt finance income tax if it's done inside a Roth solo 401k. That tax is triggered if you utilize the self-directed Roth IRA, however. So that's a big difference. Of course, just like Roth IRAs, Roth solo 401k plans are not subject to required minimum distributions. It used to be that clients would convert to the Roth IRA instead of the Roth solo 401k because Roth solo 401ks used to be subject to require minimum distributions, which is when you have to start distributing funds from your plan if you're age 73. Well, Secure Act 2.0 changed that for the better, and now Roth solo 401ks are no longer subject to require minimum distributions. Okay, it looks like we have some questions here. Let's take a look at those questions, and then we'll go ahead and go over some more topics here, or some more information regarding today's topic, I should say, which is what is the maximum solo 401k contribution for Mega Backdoor Roth? Again, please like today's video to help get the word out to other solopreneurs. Please subscribe to our YouTube channel so that you receive notifications when we go live. For example, today we'll be going live again in a few hours. We typically go live at least once a day, oftentimes twice a day. So if you subscribe to our YouTube channel, you'll receive notifications. You can also access our video catalog. We have over 900 videos on our YouTube channel covering all topics surrounding retirement accounts, including solo 401k, self-directed IRAs, and so forth. You can also join our community. It's free to join. We have over 33,000 members there. You can post forums. You can even post your own blog post out there, especially if you're a financial professional and you want to get your company's information out there. You can create blog posts, link them back to your website so that you get some traffic going to your website. We also have the My Solo 401k Artificial Intelligence. Take a look at that. It's solo401k.ai. Okay, let's take a look at some questions here. I have a Roth IRA. Can we roll over the Roth IRA to the Roth Solo 401k? Good question. Unfortunately, the answer is no. And that's because the Roth IRA regulations do not allow for it. In other words, it's a Roth IRA restriction. You can learn more about that restriction by visiting IRS publication number 590, which is the publication for IRAs, including Roth IRAs. It's also important to note that non-deductible IRA funds, that is contributions that you make as a non-deductible IRA contributions, those also can never be transferred to the Roth Solo 401k. However, the earnings on those non-deductible IRA funds can be transferred to the pre-tax solo 401k so that you isolate those non-deductible IRA funds so that you can then convert those non-deductible IRA funds to the Roth IRA as part of the backdoor Roth IRA. We actually did a really good webinar on that recently, and we posted that video on our YouTube channel. So take a look at that. But again, unfortunately, the Roth IRA regulations do not allow for the transfer of a Roth Solo 401 of a Roth IRA to a Roth Solo 401k. However, you can transfer a Roth Solo 401k to a Roth IRA provided you meet certain triggering events like age 59 and a half or no longer self-employed. Don't confuse the Mega Backdoor Roth strategy with that. Okay, so looks like we had a follow-up question. Or even an after-tax solo 401k. No, unfortunately, a Roth IRA can never be transferred to the solo 401k, whether to the pre-tax solo 401k, the Roth solo 401k, or the voluntary after-tax solo 401k. And again, that's a Roth IRA restriction. There's been talk in Congress for the last decade of changing that regulation, but they still haven't changed it. Maybe with Secure Act 3.0, they'll change it. But if they do, we'll be sure to do a live webinar on that topic because that'll be a very important topic to discuss. Okay, let's continue with today's topic. Please continue to type over your questions regarding any aspect of solo 401k plans, self-directed IRAs, checkbook IRA, rollover business startup 401k, traditional 401k, and we'll go over those questions for you. So let's get back to the slide that we were discussing. So we've talked about the contribution limits, how after-tax contributions work, the formula for the backdoor. Let's talk about common mistakes to avoid. So when utilizing the Mega Backdoor Roth Solo 401k strategy, and we've kind of touched on this already, make sure that you utilize a provider who's going to document that Mega Backdoor Roth Solo 401k strategy for you. It's got to be documented on a form, and it's got to be reported to the government on a Form 1099-R under 2 steps. You got to send an actual copy to the government, and you also have to report it on your taxes. So make sure that whoever you decide to use for the Mega Backdoor Roth strategy, make sure that they do the complete job, not just part of the job. Also, make sure that you understand that in order to utilize the Mega Backdoor Roth Solo 401k strategy, you have to have earned income from self-employment activity in order to justify that contribution. You can't just say, well, I don't have any self-employment income, but I do have a large chunk of funds in my personal brokerage account. I'm going to use those funds to fund the Mega Backdoor Roth strategy. Unfortunately, that's not allowed. Why? Because you have to have the necessary earned income from self-employment to justify that contribution. Remember, retirement accounts like solo 401k plans are for people who are self-employed. That's number one. Number two, you cannot employ any non-owner full-time W-2 employees who work 1,000 hours or more in any business that you own. So that's rule applies across the board. Also, you have to have enough earned self-employment income to justify that contribution. So those are common mistakes to avoid. Okay, we talked about some real-world examples already. Looks like we have another question here. Let's take a look at that. I'm a current client. Quick question. Can employer contributions be Roth with new regulations? I understand how the plan is currently written doesn't allow for employer Roth contributions. Can you talk about this? So number one, yes, our plan does allow for employer Roth solo 401k contributions. It's already embedded in the plan that you can make Roth contributions to the solo 401k. Therefore, you can make both employee Roth solo 401k contributions and or employer Roth solo 401k contributions. For those out there who do not know what an employer Roth solo 401k contribution, let's talk about that. So one, it used to be that you could only make employee Roth solo 401k contributions. Well, Secure Act 2.0 changed those rules. And it's not as good as it sounds, unfortunately. Secure Act 2.0 now allows for employer Roth solo 401k contributions, but don't get too excited because even though it's an employer Roth solo 401k contribution, it's a little bit quirky. Why? Because you're still going to have to pay taxes on those employer Roth solo 401k contributions. It's going to be treated as if you processed an end plan conversion of pre-tax solo 401k funds to the Roth solo 401k. That's why it's generally best to utilize the Mega Backdoor Roth solo 401k strategy instead. Because one, the calculation is dollar for dollar, whereas with an employer Roth solo 401k contribution, it's a percentage calculation. So you got to have more self-employment income in order to get to that overall limit. Second, when you make that employer Roth solo 401k contribution, that's going to flow into the employer Roth solo 401k bucket. So the Roth solo 401k bucket. So this bucket, give me a moment here. Let me fix this image a little better. So it's going to flow into, let's see here. Give me a moment here. Okay, it's going to flow into this bucket here, the Roth bucket. So if you make employer Roth solo 401k contributions and or employee Roth solo 401k contributions, those all flow into this bucket here. Now, when you make that employer Roth solo 401k contribution, you get a deduction for that contribution on the employer tax return. So for example, if your self-employed business is taxed as an S corporation, and let's say your W-2 wages from that S corporation are $100,000, and you want to make an employer Roth solo 401k contribution, then the calculation is a percentage based. It's not dollar for dollar. So you can contribute 25% of those box one gross wages listed on a W-2 as an employer Roth solo 401k contribution. So a total of $25,000. That $25,000 would flow into the Roth solo 401k bucket. You then take a deduction on your Form 1120S for making that employer Roth solo 401k contribution. However, you're going to turn around and treat it as a taxable conversion on your personal Form 1040 tax return. So you're going to have to pay taxes on $25,000. So now it might bump you up into a higher tax bracket. So just keep in mind about the regulations when making employer Roth solo 401k contributions, because it sounds really nice on the surface, but it may not be as advantageous and it might be more of a hassle for you. All right, good question. Let's see if we have any other questions here. But yes, our plan does support employee Roth solo 401k contributions as well as employer Roth solo 401k contributions. Looks like we've got a question here, another question from Bill here. There we go. Hypothetically, if I have 100,000 in 1099 income, how much can I contribute to after-tax solo 401k? Note, I'm contributing 23,500 toward my day job's 401k already. Great question. So with the sole proprietorship, aka 1099 income, the calculation is a little bit different. Because unlike an S corporation, where you can base the contribution on the gross wages, if your self-employed business is a sole proprietorship or a partnership, it's different because you have to subtract 1/2 of self-employment income tax from your net self-employment income figure. So if your net self-employment income from your 1099 income, which you're going to report on your Form Schedule C, if that income is, let's say line 31 is $100,000, then you're going to easily be able to contribute the full $70,000 as a voluntary after-tax solo 401k contribution for tax year 2025. Now, let's see if I can find that magic number of how much you would need, how much line 31 Schedule C self-employment income you would need to maximize that $70,000 Mega Backdoor Roth solo 401k contribution. Give me a moment here while I look up some information on that. If I can easily find that here. Give me one moment here. I think I found something here. Let me share this link as well. We actually did a separate webinar on this topic here. We also have a contribution calculator that we can go over so that you can understand how to calculate that Mega Backdoor Roth Solo 401k contribution when you're self-employed business as a sole proprietorship. So here's the link to the page that we did a video on earlier this year regarding maximizing the Mega Backdoor Roth Solo 401k strategy for tax year 2025 for a sole proprietorship self-employed business. Let me see if I can share my screen as well. Give me a moment here. Okay. Well, so here's the page with the video that we did a webinar on earlier this year. It looks like May 19th regarding maximizing solo 401k contributions when you're self-employed business as a sole proprietorship. So scrolling down, let's see if we can find that for a mega backdoor. So here we go. Max scenario number 4, maximizing Roth contributions. So if you're under age 50, you're going to need to make at least $75,000, $322 of line 31 Schedule C income. And the reason why you need $75,322 in order to contribute $70,000 is because you have to subtract 1/2 of self-employment income tax from that figure there. So that's why you need more self-employment income when you're a sole proprietorship versus if you're self-employed business with an S corporation. That is, an S corporation, your contributions are based on your W-2 wages, and you are not required to subtract 1/2 of self-employment income tax when performing the solo 401k contribution calculation, like you do for a sole proprietorship or a partnership for that matter. Now, keep in mind here that, and I'm glad this is coming up here, that catch-up contributions, so the $7,500 for those who are age 50 or older, or even the super catch-up contribution of $11,250, those catch-up contributions are not allowed to be deposited to the voluntary after-tax solo 401k as part of the Mega Backdoor Roth Solo 401k strategy. But that's not a problem because those can be contributed directly to the Roth Solo 401k bucket. Because keep in mind, the Mega Backdoor Roth Solo 401k strategy entails making voluntary after-tax solo 401k contributions that then get converted to the Roth Solo 401k bucket. So the catch-up contributions have to be deposited directly to the Roth Solo 401k bucket. They can never go to the voluntary after-tax solo 401k bucket. So that's important to understand. Okay, let's see. Let me stop sharing that screen and we'll go back to more questions here. And then if I can, here we go. And then we'll also continue with today's daily webinar, which is, what is the maximum solo 401k contribution for Mega Backdoor Roth? So let's take a look at some more questions here. Again, please like today's video to help get the word out to other solopreneurs like yourself. Please subscribe to our YouTube channel. Right here is the link. You can subscribe to it so you receive notifications when we go live. We also have a large video library with over 900 videos. You can also follow the conversation on our community. It's free to join. We have over 33,000 members there, lots of forum posts. You can also publish your own blog posts, link it back to your own company website to help get some traffic to your website as well. We also have our solo 401k AI. That address to that artificial intelligence is solo401k.ai. Okay, let's see if we have some more questions here. So, let's finish answering your question here. So we answered the first part. Now, the second part is that even if you contribute to your day job 401k, that does not impact your Mega Backdoor Roth solo 401k strategy. And that's huge because typically when you make employee contributions to your daytime job, that's going to impact the contributions that you make to your solo 401k. Well, that's another advantage about the Mega Backdoor Roth. You can maximize your daytime job 401k contributions, and that's not going to impact the amount of contributions that you can make to your solo 401k as part of the Mega Backdoor Roth strategy. For example, let's say that you've contributed $23,500 to your daytime employer 401k. Let's say you work for Amazon or Nvidia and you participate in their 401k, but you also have a self-employed business on the side, and and let's say that you report enough net self-employment income in your situation. It's a sole proprietorship because you're a 1099 contractor. So if you report $100,000 of sole proprietorship earned self-employment income, you're going to be able to contribute that entire you're going to be able to contribute $70,000 as a voluntary after-tax solo 401k contribution and turn around and convert it to the Roth solo 401k or the Roth IRA. So talk about really saving for retirement. Even if you maximize your daytime employer contribution all the way up to $70,000, it doesn't matter. You could still do the Mega Backdoor Roth solo 401k strategy as long as you have enough net self-employment income to justify that $70,000 contribution, and then turn around and convert it to the Roth solo 401k. So in short, voluntary after-tax solo 401k contributions are never impacted by your daytime job contributions that you make to your daytime job 401k. Now, a caveat is don't apply that same rule to 403bs. So if you're a doctor or you're in the educational field and you have a 403b, those rules those contributions to that 403b do impact your Mega Backdoor Roth solo 401k strategy negatively, unfortunately. We've done a video on that topic in the past. So again, visit our video library and you can find all these different videos on all these different topics and questions I've been answering today. I mean, like I said, we have over 900 videos out there. We've got over 16,000 subscribers, so we're very active. We go live at least once a day, oftentimes twice a day, so please subscribe to our YouTube channel so that you receive notifications when we go live. Okay, it looks like we might have some more questions here. Give me a moment here. So, looks like we got a comment here from Tim. I'll go ahead and send you a separate email, Tim, and we'll go over your question there. And then also, let me jot down here. Give me a moment here. Once we get done with this webinar, we'll reach out to you regarding your particular account question. Okay, so looks like we don't have any other questions at the moment. Oh, looks like we got a question here from Bill. Happy to hear that employer Roth contributions can be made. Can you also speak to the mechanics of how to execute this legally? I already went over those mechanics, so you can listen to the webinar when we're done here. I talked at great length regarding how to make employer Roth solo 401k contributions and how to report them and how it triggers 1099-R reporting because it's going to be taxable as an in-plan conversion. So I think you may have asked that question after I had gone over that. Okay, so we got a question here. My employer retirement plan is a 457. You must work for the government. However, the company's match goes into 403b. Bizarre setup. That is bizarre. Never heard of that. Oh, you must be. Are you working for like a school or a hospital? Um, so in that case, 70,000 limit is across all of them, including solo 401k. Good question. So you're exactly right. If your employer is making any type of contribution to that 403b, then that 403b contribution is going to impact your voluntary after-tax solo 401k contributions, because you would have to subtract whatever amount was deposited to that 403b from the overall $70,000 contribution limit to a solo 401k. So if you wanted to contribute a total of $70,000 to the solo 401k as a voluntary after-tax solo 401k contribution for tax year 2025, and let's say you made $20,000 contribution to your 403b, or your employer did, you're going to have to reduce that $70,000 by 20,000. So you would only be able to contribute $50,000 as a voluntary after-tax solo 401k contribution to the solo 401k, and then turn around and convert it to the Roth solo 401k or the Roth IRA as part of the Mega Backdoor Roth. So yeah, that's pretty bizarre. Now, if let's say you only had a 457b, then all the and you maximize all your 457b contributions, those would not impact your Mega Backdoor Roth solo 401k overall contribution limit, and therefore you would still be able to make a $70,000 voluntary after-tax solo 401k contribution and then convert it to the Roth solo 401k or the Roth IRA. Okay, yep, it's state-owned university hospital system. Okay, well, let's see here. Let's get back to our today's topic here. We're about done anyways. So we've been talking at great length regarding today's topic, which is what is the maximum solo 401k contribution for Mega Backdoor Roth? So we talked about the over 50 catch-up contribution. We talked about how catch-up contributions can never be applied to the voluntary after-tax solo 401k bucket as part of the Mega Backdoor Roth strategy. So simply stated, the maximum Mega Backdoor Roth solo 401k limit for tax year 2025 is $70,000. And again, the catch-up contribution can be deposited directly to the Roth solo 401k. Or if you're over age 60, but not older than 63, you can do the $11,250 catch-up instead, and that would be deposited directly to the Roth solo 401k bucket. So this bucket right here. Okay, so back to our slide here. So we talked about the contribution calculation for Mega Backdoor already. We already talked about the rules and things to avoid. Maximize your retirement with the Mega Backdoor Roth. We talked about that. Now, keep in mind that if you utilize the Mega Backdoor Roth, that the overall limit for the contribution limit to a solo 401k for tax year 2025 is $70,000 for those who are under age 50. So if you decide to treat the entire $70,000 as part of the Mega Backdoor Roth solo 401k strategy, then you're not going to be able to contribute any more to the solo 401k. So you won't be able to make any employee contributions or employer contributions. Second, you can choose to do a contribution mix. What do I mean by that? Well, let's say that you're in a high tax bracket and you want to be able to reduce your taxable income for the year. Well, when you make voluntary after-tax solo 401k contributions, that will not reduce your taxable income for the year. However, if you make employee pre-tax solo 401k contributions, and or employer pre-tax solo 401k contributions, those do reduce your taxable income for the year. So you may want to put some employee pre-tax contributions and then some voluntary after-tax solo 401k contributions as part of the Mega Backdoor Roth. So let's say, again, you only have $70,000 to work with. So assuming you have enough net self-employment income, let's say your self-employed business is an S corporation, you pay yourself, let's say, 100,000 of W-2 wages from that self-employed business. You can make an employee contribution of $23,500 as a pre-tax. That would be deposited to the pre-tax solo 401k bucket. That'll help reduce your taxable income for the year. And then the difference, up to $70,000, you can make it as a voluntary after-tax solo 401k contribution, and then convert it to the Roth solo 401k. You could even do an employer Roth, an employer pre-tax contribution as well as an employee pre-tax contribution, and then also do a voluntary after-tax contribution. So sticking with that $100,000 example, let's say Jack is self-employed in an S corporation. For tax year 2025, Jack pays himself $100,000 of W-2 wages from his self-employed business. Jack wants to be able to reduce his taxable income for the year, but he also wants to make some voluntary after-tax contributions. So Jack decides to make a $23,500 employee pre-tax contribution that gets deposited to the pre-tax solo 401k bucket. Jack also wants to make an employer profit sharing contribution as a pre-tax contribution that's calculated on a percentage base. So it would be 25% of 100,000. So that would be $25,000 as an employer pre-tax contribution. That would get deposited to the pre-tax solo 401k bucket. So if you add that 25,000 plus 23,500, you get a total of 48,500. You then subtract that 48,500 from $70,000 equals $21,500. Jack can then put $21,500 as a contribution to the voluntary after-tax solo 401k bucket and then convert it to the Roth solo 401k or the Roth IRA. When you add those three amounts together, that equals $70,000, which is the overall contribution limit. All right. So that concludes today's topic. Looks like we've got another question here. Let's take a look at that and then we'll be done. My contribution to the 457 is $10,000. Employer 403B is $5,000. I can contribute $65,000 given I have sufficient 1099 income to the solo 401k. That's exactly right. Why? Because the 403B contributions bleed into the amount that you can contribute to a solo 401k. However, the 457 contributions do not impact the contributions that you make to your solo 401k plan. Good question. All right. Thank you for joining today's daily webinar. Until next time, have a great rest of the day.